Hey everyone, welcome to another episode of the Remote Real Estate Investor. I'm Michael Album, and today we have with us Dave Homyak, who's going to be talking to us about short-term rentals out in the Smoky Mountains of Tennessee. And what he did to leave his job is under 2 years with these types of investments. Without any further ado, let's get into it. Hey Dave, thanks so much for taking the time to hang out with me today. I really appreciate it.
Yeah, thanks for having me.
No, my pleasure. For our listeners who don't know you, give us a brief background. Who you are, where'd you come from, and how'd you get started in real estate?
Okay, so basically I was an engineer. I did engine calibration for a living. I worked for Chrysler, Detroit Diesel, General Motors, a bunch of companies like that, and always wanted to do something in real estate, but quite honestly was afraid to do it. So my first investment property I purchased at 53. And the reason I purchased it is because I wanted to be able to get away from my W-2 income. And I'd had some money saved up. I thought I'd a pretty good saver, but I was like, what would it take to make me feel like I can walk away and not have any anxiety whatsoever?
Mm-hmm.
And the answer was pretty easy. It's like, if I replace my income, then I can walk away and do anything I want. And I will not have to ever worry. And so basically I set the goal for myself to replace my engineering income in 2 years with real estate. And I was able to do it in a little bit under a year. And that was due to getting into short-term rentals. And I ended up doing it in what I had kind of researched somewhat to the best of my ability at the time, but then what ended up an independent third party, which is airdna.co. They ranked it as the best market in 18, best market in 19. It's 3 of the top 6 large cities in 20, and I'm waiting for the latest report to come out, and I'm sure it's going to be in the top again. So bottom line is I happened to buy in one of the best markets, and my research indicated that was a good plan. I had no idea that it was going to work out the way it did as quickly as it did, though.
That's incredible. And so we've got to ask, where is said market?
Said market is in the Smoky Mountains, which is eastern Tennessee. The 3 major cities are Gatlinburg and Pigeon Forge and Sevierville. So Sevierville is the one that people haven't heard of as much, but it's equally profitable and made the airdna.co list. Basically ended up, I made the decision, looked into apartment syndication, knew I could replace my income with that, but didn't know if I could hit a 2-year timeline. Ended up deciding on the Smokies. I looked at the Smokies, Panhandle of Florida, which is also a good choice. I think Smokies are a little better. Less hurricanes there. I really wanted to go into Panama City, and that got hit about a year later. And I'm like, oh, I'm so glad I don't have to mess with that stuff.
Dodge the bullet.
Yeah, exactly. And then Scottsdale. And I ended up going to the Smokies. So started the search and started trying to figure out what I was going to do in March of 18. April was kind of apartment syndication month. First weekend in May, I actually went to the Smokies to look for the first time and ended up seeing 6 cabins, tried to make a decision on 3, picked one, bought it. So end of May, I had that up and running. It worked great over the summer, bought another one in August, and then bought a third one in November. And in December, I got wind that General Motors was offering buyouts, and I said, I think it's time to go. And my goal was actually to probably stay with General Motors through July. And basically they said, if you leave now, we'll pay you through July. So I said, okay, I get 4 or 5 months head start on my leaving and and all the healthcare and stuff like that goes with it. So yeah, it worked out really well.
Oh, fantastic. So what about the Smokies attracted you there, just out of curiosity?
So the thing that attracted me was there were people that were making a lot, really good cash on cash returns. So one of the things that makes the Smokies a lot different than most other markets, and in the Panhandle of Florida, it's fairly similar, but all these things are second homes. They're sold turnkey. So if you have to furnish, if you have to buy silverware, if you have to put in beds, TVs, all that stuff, that's just more money that you're going to have to pay. When the Smokies, there's basically 2 contracts that get written when you buy a house. One is the purchase agreement for the cabin or the chalet, whatever your choice may be. And there's a reason that chalets sometimes work a lot better than cabins, and mainly due to supply and demand issues of buyers. But you also write a purchase agreement for the entire contents of the house. So, you have, here's the cabin price, the chalet price, and for $1, you get the contents. So I literally am closing midweek, and that weekend I have it rented out. So that's one of the benefits of you don't have a whole lot of downtime. And the second benefit that I didn't even know about at the time, or didn't have nearly as much of a priority on as I do now when I help other investors, is the whole regulation. So in the Smokies, there's not that many hotels. They cannot take nearly as many visitors into the hotels as they've built up entertainment venues, things like that. So there's no way that they can go in like they do in other cities and say, we want to ban short-term rentals, or we want to regulate heavily short-term rentals, and, play that regulatory card and make what used to be a really good investment not nearly as good of an investment. And I think you see that in the Panhandle of Florida as well as the Smokies, but I like the Smokies a little better, just weather-wise, stuff like that.
That's
So
awesome.
yeah, I mean, then the other thing is there's a couple loans that are available down there that I'm not sure if they're available nationwide. I know they're available down there, but there's a 10% down second home loan. So if your intention is to spend 14 days or more in that property that you're buying, the first one down there, you can get a second home loan on it. And that's a fantastic way to get into that market, because, most investment properties you're not going to get for 10% down.
Right.
And certainly not investment properties, that isn't primary residence. You can put down less, but for secondary to put down 10% is pretty crazy. And then the loan that just, it still makes me smile. It's making me smile right now. And I've talked about it hundreds of times with different investors, is there's a 15% down investment loan. And to qualify for the loan, you have to project what the income of the cabin is. And if the cabin throws off enough income, that qualifies you on a debt to income ratio. So for example, if the cabin is going to throw off $5,000 a month and the payment's going to be $2,000, and you're maxed out on debt to income right now, if you're at 40%, guess what? You still qualify because
of the cash flow.
You project that the cabin will throw off $5,000 a month, and that cash flow is enough to cover the mortgage payment. So it's like one of those things that you're like, I've actually checked with once a year, I check with my loan officer, the person that I've used, just, is this still a thing? She's like, yep, still a thing. And I'm like,
this?
Okay. I'm waiting for somebody to say, I'm not sure that should be a thing,
That's
but it
amazing.
still is now. So even if your debt to income is fairly high, you can still qualify for the investment loan at 15%.
That is just incredible.
Yeah, it makes me smile every time I tell somebody. I still can't believe it.
Yeah, I'm still trying to wrap my head around it. It doesn't seem to make sense, but if it's a thing, it's a thing.
At least for me, when I've used an investment loan down there, like the property actually made the money. It wasn't like you had to stretch or make something up. Like I think it's going to make 10,000 and it makes 5 or something like that. It's more like if it's going, I said an honest 5. The payment I think was $1,600 or $1,700 a month, and it did make the 5 a month that I said it would. And then where it gets really interesting is once you show the mortgage company a Schedule E and prove that it made what you said it was going to make, you now qualify for another one the next year. So basically, you can get one of these a year as long as you wait until after you file your Schedule E and give that to the loan officer. And then if you are married, and if you're playing in two-player mode, then you and your wife can both do one a year on that plan. And then the next year you can both do one on that plan.
Oh my gosh.
So it's a way to build a portfolio very fast. And that market is still one of the best markets when it comes to cash on cash returns. So even though there's been a lot of appreciation, the nightly rates have gone up a lot. They had, I think, about 2,000 cabins burned down in 2016. And before COVID came in, they had, I think, 5 developers come in and start to build. And the nightly rates have just gone up and up and up. And it's just one of those places that when the economy does well, that place does well. The Smokies do well. When the economy does poorly, the Smokies do well. Why? 60% of the United States is within driving distance of the Smokies. Great Smoky Mountain National Park is the most visited national park. And in 2009, 2010, visitorship actually went up when the economy was doing poorly. And when people are like, why do you think that happens? I explained, if you're afraid about the economy, you're not flying to Florida and taking a 1-week Disney cruise, but you're still going to want to go on vacation. So you're saying, you know what, I'm going to drive to the Smokies. I'm going to rent a cabin for 3 days. We're going to do this thing on the down low. It's going to be nice, but it's not going to be as extravagant. So I think even when things slow down, I obviously know a lot of people that invest down there, and kind of one of the questions that we ask each other is, what am I missing? It seems like there's really big upside and not a whole lot of downside. And we haven't come up with anything yet that makes it scary. I very well may be missing something, but I've asked a couple guys and we can't figure it out.
So, I mean, I love hearing all of this, because as I was sharing with you when we connected before the podcast here, I just 1031 into a property down there in Sevierville. And so I'm very excited now to get that up and running.
Right.
And hearing this only makes me even more giddy.
Yeah. It's pretty cool. I guess the other thing that I've done that I think is interesting, I think your listeners will find interesting, is the other thing that I do is, as an engineer, I don't sit still very well. So I'm constantly analyzing my properties, and I've owned 5, but I keep trading up and 1031ing up. So for example, 2018, I bought a 3-bedroom, a 4-bedroom, a 5-bedroom. Middle of 19, I look and I say, hey, the 5-bedroom's doing better than the 4. The 4-bedroom's doing better than the 3. And they've all been appreciating. I know. I think I'll sell this 3-bedroom. So it's underperforming the other 2. So I sold the 3-bedroom, and it had gone up enough that I actually used that 1031 money as a down payment on an 8-bedroom. So very directionally correct. 8-bedroom does really well. It cost me basically, the down payment that I put on the 3-bedroom, and then just this, the sale and the transfer of the money to control an 8-bedroom a year later. And there are different people that are doing that. So some are on a never sell anything. And I get some people upset on some of the real estate investment forums because they say, what's some of the worst real estate investing advice you've ever heard? And I say, buy and hold. And they just don't like that whatsoever. And I'm like, I think I'm doing okay with it. And maybe I should have kept them all and just bought other ones. And then the other thing I ended up just recently doing is I sold the first cabin I bought, which was a 4-bedroom. And I 1031'd it into this ultimate killer, like 5-bedroom, the most incredible views. Oh, just amazing. So that's kind of the other half of the coin, is when you're looking at a lot of when you're looking to do Airbnb anywhere, when you take a look at the market, and if you buy the AirDNA data, what you're going to see is, especially when you start bigger places there are less bigger places. So you're going to get outsized demand for the supply of bigger places. So you're able to charge more. More bedrooms is better. In the Smokies, a view is better. A pool in the basement is better. And what you're also going to see is that if you're running a 95th percentile property, your gross is double what a 50th percentile property's gross is going to be. Mm. So that isn't, if you're running a 95th percentile property, your profit's going to be double, because you're already making a profit at the 50th percentile. It means your profit's going to be, times 3, times 4, times 5, because you've already got your expenses paid at 50th percentile. So anything above 50th percentile, you really need, that's just money in your pocket. So you really need to, I've made some mistakes along the way that have cost me someplace between like a pretty lot of money and just like a lot of money. There are no small mistakes that I did. So one of the mistakes that I made was, if I can put 10% down, this will be, I'm going to try not to put much more money in. Like if something breaks, I'm going to do it. And looking back on it, there's a couple of things that I could have upgraded that wouldn't have been a big deal, that would have netted me more money in the long run, better reviews. When you look at that delta between the 50th percentile and the 95th percentile, it's amazing. So it's worth doing that and not kind of being the
going on the cheap.
I put in 10% and I'm going to try never to put another penny in unless something breaks.
Yep. So it's worth the upfront investment.
So yeah, it totally is worth the upfront investment. And even if it's, and let's just say it's not, let's just say you only have the 10% in the closing costs. The other thing is you should be making a couple thousand a month anyway. So, I mean, in 2 or 3 months, you're going to have $5,000, $6,000, $7,000, $10,000 to spend. So maybe you wait a couple months and then you put in, the new furniture in the living room and refelt the pool table or whatever, get the better hot tub, whatever it is. But you feed that back in. I ended up just selling a place and it's just doing I have some friends that also have properties that are identical, like literally identical to mine, like same layout, same view, 50 feet away. And we were talking some numbers and, one guy did a really over the top renovation. His numbers were crazy. And one guy did a milder renovation. And I was doing some math of what it would have taken me to put in that. And it had been like under 10 grand. And basically he was outgrossing me by about 10 grand. I'm like, oh, you put in the 10 grand and for the last 3 years, I could have made 10 grand instead of I saved 10 grand and it cost me 30 grand. Got it.
Right.
So my mind is a work in progress for maximizing all these things.
Well, that's the engineer in you. I totally get that as a reformed engineer myself. We get that.
Yeah. Okay. Yeah.
So
yeah, totally.
Dave, I'm curious to get your thoughts because I'm sure that there are people that would argue that there are Smoky Mountain equivalents all over the place. I could invest anywhere in the country and make a good return. What are your thoughts on that, and how do you kind of narrow in on some hot markets?
I agree that you could probably make the same money if you dig into 95th percentile stuff. If you dig into all the stuff that makes money, I think it's harder to make money in other places. And what's really interesting is how I made more money in the Smokies. I've made significantly more money in the Smokies with appreciation than I actually did from Airbnb. So if you're making crazy cash on cash, which you still can kind of do, if you know where to look, and your appreciation is outpacing your cash on cash, that's the thing that I think some of the other markets lack. And I've known people that have had places that, guy that was in a place just outside of Denver and he was killing it in his neighborhood. And I forget if it was him or basically there were two of them that were doing Airbnb in there and it got banned. And all of a sudden everything's gone. Or you do it in some small place that maybe you're making money, but how do you get that out and how do you find the investors to come in behind that? Do they know that's a hot market? So I think a lot of people concentrate, and obviously the rental arbitrage people are just doing a strictly cash on cash thing. But I think if you look at the markets that are being rated by AirDNA, I think you're going to have a better overall return because other people are just being pointed to that direction and they have the proof that they need. If there's any fear of the numbers, the books being cooked, whatever, in, some far off market, the middle of Wyoming, whatever, I don't know. I mean, I've heard some really interesting numbers of people buying places in the Midwest with pools during COVID that they just annihilated because kids want to swim and people have money. And if you couldn't go to the public pool and your kid really wanted to swim, guess what? You're dropping top dollar. You're going to beat out the other guy to get that lock in that place with a swim pool, even though it's a less expensive city. So, I mean, those guys did really well. How they're going to do now that the public pools are kind of open, I don't know. But I think overall, I trust the AirDNA data. And I think the cash on cash is available in other places. I'm not sure the appreciation is as much.
Okay. And so you actually help people find properties out in the Smokies. Is that right?
I do. I do. That wasn't my goal. My goal straight up was I was an engineer. I took my buyout. I said, I get to do whatever I want. And I don't sit still well. So I'm like, I am going to learn to fly airplanes, and my goal is to fly jets. So my goal was to fly for Delta Connect.
Awesome.
And so I'm like, I got my private pilot license. I got my instrument pilot license, made it halfway through commercial license. And then kind of like the whole real estate thing kind of blew up for me. And even before I started work, about halfway through halfway through the instrument license, I started to get people asking me, hey, can you kind of help me do that? And can you help me find some of the best performing properties? And I think because of the engineering background and because I'm not afraid to do the numbers and because I'm not afraid to run some spreadsheets and stuff like that, I'm able to better explain to some of the more technical science math investors why this makes the most sense. And I'm able to make them feel comfortable enough to invest there. So I'm getting a lot of clients that have never invested anywhere. I'm getting a lot of 1031 clients, but they see the numbers and it's just like, you can't not do it. And it's one of those things that, right now, depending on the cash on cash that you're looking for, a lot of the places don't work, but if you know where to look and how to make it work, it's a lot easier. And it's one of those things that it's like, even with MLS access down there, a lot of the agents don't put in the numbers that you need to see. So there's a lot of calling and texting and stuff to dig a lot of this stuff out to make sure that your clients are getting the best stuff. And I think that's what myself and my teammate do better than a lot of other agents, is dig out those numbers and make our clients comfortable that they're getting some of the best returns that they can in one of the best markets.
That's awesome. So Dave, talk to us a little bit about what do some of these properties that we're talking about cost, and what are some of those cash on cash return numbers and metrics that you're seeing?
Right. So yeah, when I got started, things were a lot cheaper. It was a lot easier. But the crazy thing is the numbers were slightly better when I got started, but they're still pretty righteous right now. So right now it's very difficult to find, but I am finding some clients 60% cash on cash returns. I'm finding people between 40% and 50% cash on a fairly regular basis. But yeah, there's just some places that are underpriced a little bit. And that's why you're looking just to see what it can do. And there's so many. One of the things I don't like about the Facebook forums, any Facebook forum for Airbnb, is the amount of people that say that nobody should ever take a course. And I never took a course. And all these people are telling these brand new people, don't take the course. And I added up what I didn't know and how much it cost me. And it's like 40 or 50,000. Like if I had taken the course, I would have saved myself easily 40 or $50,000. And I'm like, you have no idea how much you can spend on a course and save money. So one of the things that we're seeing down there when we're finding these properties, right, is there was somebody that was just bragging that they just filled their last 2 nights for 2021. And I just thought, boy, you are so underpriced. If you have your entire thing booked up every last day, that just tells me you're leaving a lot of money on the table. So I mean, it's a combination of what, kind of what numbers they're generating currently, what their calendar looks like. If they're completely full and they have pretty high gross, well, there's a lot of room, a lot of upside. There's just a bunch of different things like that we're using to find properties. And just the straight math is, if you find some property compelling enough to pay $100,000 more for it, that breaks down to roughly $500 a month in principal and interest payment. That breaks down. So let's break it down to short-term rental terms. You're going to rent it out. It's going to be under 500, but we'll just call it 500 for the easy math. Let's just say you're going to rent it out 20 days a month. No, in the summer, there's no way you're renting it out 20 days a month. You're renting it out a lot more than that. but let's just say 20 just to make the math very conservative. If you rent it out 20 days a month, that means whatever you paid $100,000 more for, if you can charge $25 a day more for that additional amenity, you're breaking even. And if you can charge $26 a day more, you're making money. And guess what a view costs in the Smoky Mountains? About $100,000. Can you rent a cabin for more than $25 a day more if you get a view? Heck yes. Can you rent can you rent a 5-bedroom instead of a 3-bedroom for $25 more a day? Heck yes. There's so many of these things. So bottom line is, if you want to do just straight math and let the math guide you to what you need to buy to have the best cash on cash, you're starting to get into more expensive properties. And, basically kind of up to any price works. Several million is fine if you have the financial ability to do that. Things start to make sense. Things make a ton of sense in like $750,000, $800,000 range. You're still making money in just about any range, 300, 400,000, but you're not making as much and you don't have as much cushion. So there's a lot of people that are like, I want to start small and I'm like, I will be happy to help you find and buy anything you want, but let me explain to you why starting small, in my opinion, is more dangerous than starting with something that's making $5,000, $6,000, $7,000 a month.
Right.
Because guess what? You can lose $5,000, $6,000, $7,000 a month and you're still breaking even versus, if you're making $1,000, $1,500 a month and something goes wrong, you're now making nothing and you may be coming out of pocket. I never want to come out of pocket.
This is mind-blowing, Dave. This is such good stuff.
Yeah, cool.
So
I'm glad you like it.
As we wrap up here and let you get out of here, what's a final takeaway that first-time short-term investors should be thinking about? If they want to get in the short-term rental game, what's some of the hardest lessons that you've learned that you can help people steer clear from?
One of the things I see people do is, I want to stay. So there was a post I saw that said, I visit Detroit on a regular basis. I want to stay in Detroit. I think I'm going to get a short-term rental in Detroit. I say, I will pay cash for wherever I want to stay. And if I want to stay in Detroit, I'll pay cash that I've earned in the Smokies or one of the top markets. I'm very big into what's the least. I like to earn money, but what I really like to do is earn money with less effort. So if I can have 5 or 10 places in Detroit that earn me the same money as one place in the Smokies, I'm going with the Smokies all the time, or the Panhandle of Florida, or, right now, some of the other really hot ones, Joshua Tree, Broken Bow, some other places like that, northeast corner of Pennsylvania. There's a bunch of other markets, but I don't want to have, I see a lot of guys do like a 40 or 50 person kind of, or 40 or 50 property, rental arbitrage, grinding these things out. And that's just not me. So I would say, try to get the one that has the best cash flow and go from there.
Path of least resistance.
People trust me and people tell me things that they probably wouldn't tell other people. But if you knew, and you would never get any of these people on your podcast, if you knew how much money that I know that friends have burned through attempting to do short-term rentals poorly, like $50,000 a year, $75,000 a year, just, I thought I'd try this house. I thought people would really like it. And they didn't. It's like, go with the proven method. Go with the stuff that's working. Don't try to reinvent the wheel. Go to where there's thousands of other people that have already done it. And that's the big mistake that I see people do that costs them lots of money and lots of time in the end. And I don't know. And just, here's my other just general real estate investing advice. There's a friend there. I have a friend of mine who's very sharp, and he's put together a portfolio. He's mid-20s, and he's put together a portfolio that now basically makes him financially independent. He makes more money from his real estate portfolio than he does from his day job. And it's like, just ask guys like that, or ask me, or ask some, like, I have this idea. What do you think? And, he's very happy to help people. I'm very happy to help people. I'm like, yeah, I'll jump on a call for 5 minutes. Tell me that you want to invest in, I don't know, I'll either tell you how to figure out whether it's a good idea, or I'll tell you why it's a horrible idea just to begin with. Avoid places with regulation, avoid places that you might lose money, avoid anything that you can make a couple $100s on. Like, why are you doing that? Make thousands. Like, think big. Like, it's not that much harder to do. It's actually easier. So I guess that would be the other thing that I would steer new investors to.
That's so good, Dave. Well, kind of in that vein, how can people reach out to you, get a hold of you if they want to either invest with you in the Smokies or just want to bounce some ideas off of you?
I'm on Facebook. So Dave Homyak on Facebook is a way to reach me. You can message me, click on me, whatever. I have a website, Smoky Mountain Cabin Realty.com, and Smoky is SMOKY. And if somebody wants to sign up, I have some introductory investment Zoom classes, like a 60-minute thing. And I kind of explain what I think is important when finding an investment. I obviously say that the Smokies are a pretty good place to invest because I believe that. So those would be the two main places to get in touch with me. There's SmokyMountainCabinRealty.com or Dave Homyak on.
All right, Dave, this has been great. One final question that I want to ask you, because it seems like you are so hyper-focused on one particular market. Do you think it makes sense to diversify and invest across multiple different states? What are your thoughts there?
Excellent question. I am hyper-focused on the Smokies because I know those returns are incredible. I'm not necessarily saying somebody should invest in the Smokies only or the Panhandle of Florida. I'm saying follow the numbers. I really have an issue with people that have multiple properties in multiple cities, and they're not doing a comparison of how much money they're earning and how much time they're putting in. And there are properties that they have that are doing better, and there are properties they have that are underperforming. And it baffles me why somebody would want to waste their time on an underperforming property instead of cut that one loose and upgrade. So I just wish more people would run the numbers.
Well, Dave, this has been so great. Thank you again for taking the time to hang out with me. And I know we'll be chatting soon because we're fellow Smoky guys now.
Yeah, awesome. Really appreciate you having me on.
Awesome. Take care. Talk soon. Alrighty, everybody. That was our episode. A big thank you to Dave. Super, super cool story. And I'm just total fanboy because, as I mentioned in the episode, I also recently invested in the Smokies. So I'm very excited to hear that the outlook is positive. As always, if you like the episode, leave us a rating or review wherever it is you listen to your podcast. And we look forward to seeing you on the next one. Happy investing.